Welcome to Lithium-ion Rocks. It's July 6th. We're going to speak about the Lithium Market Scoreboard and individual companies, what happened in the first half. I would say that Ganfeng was a star, Mineral Resources was a star, Lithium Americas was a star, and Vulcan Energy. If I'm just looking at price performance overall, there's a huge dichotomy within the organization of Morgan Stanley, whereby their China analyst has upgraded from an underweight to an overweight Ganfeng, essentially saying prices have bottomed and are seeing a huge dichotomy between hydroxide prices and carbonate prices being basically 80% higher. Javier, who covers SQM and has been the biggest voice at Morgan Stanley and probably the entire industry, has not differentiated at all with respect to hydroxide. It just focuses on, SQM being the price setter, for the spot price in carbonate, where the China analyst is now saying, $10 to $12.50 for battery quality hydroxide. But most importantly, in their target price, they're assuming that Ganfeng should trade at something like 18 to 20 times EV to EBITDA 2 years from now in 2022. It's currently at about a 60 times EV to EBITDA. And so they're expecting, massive, EBITDA growth, which we see, they have a lot of capacity coming online, and it is with high quality customers. And Vince Andrews at Morgan Stanley, who actually has like a sell on Albemarle, suggesting that Albemarle's price should be, I think, $40 or $50, saying essentially that their contracts are going to be severely negotiated down later this year. So those contracts are going to be disproportionately hydroxide focused. And, he's also saying that the EV to EBITDA of should be derated further down to perhaps even the single digits, or very low double digit. Ganfeng, it has like an $8.5 billion market cap. And that's for a company with about $900 to $1 billion in sales in total. Albemarle has $3.5 billion in sales in total, is much more profitable. Their lithium business is $1.3 billion. They have $500 million in EBITDA last year. Their margins are 37% or so just in the lithium business, but it's valued at less than Ganfeng in the market. Morgan Stanley has a sell on that stock, and they've just upgraded to an overweight for Ganfeng. Such are the nuances of the uncorrelatedness of China markets versus non-China markets. Mineral Resources is a Ganfeng partner, but I think their stock price has been performing largely due to their iron ore business and other businesses, less so lithium. But it is a fact that they are a Ganfeng partner, so maybe there's some halo effect to Mineral Resources on that, but I'm not fully convinced on that. But another Ganfeng partner, Lithium Americas, has also been, a stellar performer. But again, I think that might be because of speculation in part that I caused, since my note, which company might Tesla buy. I think it's Thacker Pass that's driving that much more so than Argentina, but you never know. It could be a Ganfeng halo effect there. Why don't you speak a little bit about Ganfeng, and then we'll talk about other companies on the Mr. Market Scoreboard and, Europe and U.S. opportunities, as well as Australia and the South American ones.
As far as Ganfeng is concerned, there are a lot of strong attributes to the company, and one not least of which is their ability to pivot between carbonate and hydroxide in terms of their production. That MS report had a dropping off in carbonate and increasing in hydroxide, but they export roughly 70%. It was their target, and that was reiterated when we spoke to management. That could possibly go up, and of course, if you're exporting 70% plus into the ex-China market at elevated prices, then your margins start to look good. The other thing is their ability. The feedback has been on a quality, but also on a quality and price. Ganfeng's right up there, so they will benefit from the fastest growing lithium demand segment, in the market, which is the battery grade and qualified hydroxide ex-China. So got a new plant coming on stream, about 25,000 tons coming on in Q4. Obviously not in one leap. You've got to do it in stages, but without a doubt, by probably 2022, 2023, realistically, Ganfeng's going to be the biggest lithium producer in the world, probably, and certainly the biggest hydroxide producer. So, a good future for them. Valuing it, as you said, we're talking about elevated numbers, but they've got very strong growth ahead. And it's interesting because a lot of people talk about different things and about the China spot price, but if you look at the valuation of all of the lithium incumbents, a recovery in price has definitely been priced in. From a China spot price perspective, and certainly the export markets are expected to stay fairly buoyant as well. So we'll see how Ganfeng goes. Obviously, it also operates in other segments like lithium metal and so on, but the battery quality and qualified hydroxide market is definitely the driver in the positive sentiment, and I think warranted with a company that really is able to deliver and produce the goods. It's got a very low capex cost per ton, about $5,000 or less per ton in China, and growing with exposure to LAC and some other projects back in Aura, offshore, which will drive it down the cost curve, relative to arm's length spodumene concentrate purchases out of Australia.
Investing in Ganfeng, I think you're investing, for carbonate and hydroxide, volume and price.
You look at South Korean imports and you look at who's benefiting, it's Ganfeng. Market share continues to climb. So they're qualified, they're in the system, and that's where the demand is coming from. We've got two big tickets with VW and with BMW as offtake partners. Tesla and the like would definitely go with them, so they're perfectly positioned.
They are, and all of those tons are pretty much, hard rock converted into hydroxide. Albemarle has been focused on their growth from hard rock, as well. Livent did a convertible bond this month. The stock price took a major hit. The cost of capital of that was not super low. It was like over about 4.25%, and then the conversion price was fairly low. I forget, $8.50 or something like that, 30% up. But most importantly was the size. The convert was between 220, I think, with the green shoe. Maybe it'll be 250. But they were replacing a 400, plus 200 revolver, which they really couldn't draw on because they were hitting their covenants. But they had $210 million of drawn revolver. That's basically just going to be replaced by this convert, which puts at question their expansion in Argentina. They don't have capital, if they're not generating internal cash flow, which I guess they didn't last quarter. They had a loss. So I'm expecting in their second quarter announcement that their expansion, is very much on hold, which puts in question. I mean, they have an MOU with LG Chem for more hydroxide tons. They have like a half-built Bessemer City, hydroxide conversion. But if they can't produce more carbonate, what are they going to do on the, with that hydroxide? So they seem a bit stuck, and they're waiting, for a price spike in lithium hydroxide, as Paul Graves said, kind of in a fireside chat. I don't want to speak so much about, Tangxi, but I do want to mention it. But, the Greenbushes thing is outstanding. But it seems like the machinations, and everybody who I'm speaking to are just, the consensus is there's no effing way that China is going to let this out of their hands. And even with, FIRB approval, there are ways kind of around that. So, watching it closely, hoping, that a fair, situation were to happen to enable Albemarle to kind of take control, to have, Tangxi basically pay for its mistakes. But I think that's unlikely. We'll see what happens. Tangxi still has a nearly $5 billion market cap, the size of the company. is nearly the same size of SQM, a company that is.
But then there's this small matter of $3.5 billion in debt.
In debt, yeah. So again, the cost of capital in China is not what it is in America. How much of that is government supported unleveling the playing field versus just the quirkiness of the way the Chinese market operates. Do you want to speak a little bit about Altura and Pilbara before we go into LAC and the developing companies?
Yeah, with Altura, they've signed a decent offtake agreement with Shanshan, one of their key shareholders. The terms were interesting. There was some talk of it being linked to their costs. The volumes showed Shanshan having a realistic view about how they're going to ramp up their new hydroxide plant. 40,000. I think it equated to about 60,000. It equated to about 8,000 tons LCE equivalent, so quite a lot less than their capacity, but they'll need to get their production right and ramp up. And again, good to see that Altura, their material is always in demand, and Shanshan has the potential to take up more than that agreed if there is some unallocated production capacity out of Altura. So a good deal. Obviously, Altura has its challenges in terms of finances, but the product it produces and being able to keep pushing at close to nameplate will help them keep their cash costs at a lower level. The Aussie dollar has moved a bit. It's strengthened since the last while, so it will be interesting to see their cash costs when they release now on the June quarter. But good to see that they have most of their production now assigned.
You make a good point on the currency. In the depths of the COVID crisis, the Aussie dollar hit like 59.60. I looked in while I was doing the scoreboard. It was all the way back up to 69. So in line with kind of the S&P and U.S. markets, hitting, recovering almost everything, the currency has also kind of gone back to where it was.
So that 15% is going to hit directly to them. So it will be interesting.
Yeah. On the hard rock side, Sigma Lithium in Brazil announced, actually we were mentioning on Livent side, the cost of capital here. They got, I think it was 5% or LIBOR plus 4 or 5% for a $45 million green project finance, from SocGen with long duration. I think it was like 6 years. It was secured compared to Livent's unsecured convert, but for a developing company not yet in production to have such a low interest rate compared to Pilbara, again, which was 12%, and Altura, which was 15%, this is a really positive, development in the overall lithium space. I mean, Damask also had a crazy high interest rate, right? I've not seen anything this low. Project finance of this type happens in copper and gold, but the banks often force you to hedge to protect their loan. In lithium, you can't hedge. So I think this is a very positive sign for Sigma and the economics of that project. There are still a few things that need to be boxes to be ticked on a diligence side. They do need to raise 10 million of equity. But Mitsui, which has a 30 million prepay, they've given 3 million so far. This project finance will trigger the remaining 27 million of that. So even within this very depressed spodumene market, you're having a Western European bank writing a significant check at attractive terms.
I've seen, the Sigma core. It's very good material. It will be interesting to see what they can get as pricing and if that has any ramifications linked to the loan.
This is coming from a European bank. It was very heavily focused on green all over the press release. And likewise, Livent, their loan was within the sustainability principles. So the topic of sustainability and finance is is happening. That they're market terms, but what I'll say in Sigma's case, it's coming from a European bank. There have been lots of other signals within Europe of support across the battery supply chain. The European Investment Bank, which had invested in Northvolt, has now also invested in Umicore, loaned money to Umicore and their cathode plant, after also investing, in LG Chem. There's this division called the EIT Inno Energy, which signed a small, I think $800,000, plus later, for Infinity. But Savannah and Vulcan have also been, identified by this EIT Inno Energy. So there are incremental steps on the within the EU of financing, various things, and that's a positive, because we got to reduce the cost of capital in this industry to get more of these projects funded.
In terms of Europe, they are doing everything the right way. They've got carrot and stick. They've got biosubsidies. They've got CO2 emission penalties. They've got these subsidies for domestic supply chain and the battery cell. Now they're looking at cathode and looking at upstream. And there's also a lot going on in terms of infrastructure and charging infrastructure for vehicles, and then now introducing, earlier banning dates on the sale of internal combustion engines. There really is a coordinated plan in Europe, and I guess it's no surprise that they're surprising on the upside in terms of sales, in terms of commitment from OEMs, it looks like there is no turning back from that side.
Yeah, but all of the things you mentioned are, more downstream. The fact that it's now showing up upstream, right, in the mining through this EIT Inno Energy, and then so look, SG is not government funded. This is private funded, but I wonder to what extent it's not. Just like oil companies, to invest in things which are not fully, commercial, but they do it for PR purposes. I'm not saying that SG is doing this for PR purposes, but maybe they have a commitment internally to burnish their green credentials to be seen to be, financing green energy mining projects. And hats off to Sigma, who have been really pounding the table on the ESG thematic, from the get-go.
But also, I think just from a competitive level, it'll be interesting to see updated numbers, but their topics, and in terms of the processing and the quality of the material that they're going to produce is decent. As far as the spodumene concentrate universe goes, they have a very good product, and they're well positioned on the cost curve.
Definitely. I mean, they're talking, I don't know, $200 your cash cost, even though the transport cost is far further away. But Altura has been mentioning this as well. The quality matters, not just on the end product, but from across the raw spodumene. I guess the spodumene concentrate 6%, coarse, versus fine, so and matters greatly. So I know Primero is the EPC there, and we've spoken to Cam Henry in the past, and he's said fantastic things about that project. Looking forward to.
As I said, I saw at Mines and Money. I went to the booth and chatted, and had a look at the core samples and sort of dug a little bit deeper, and it's a very, very good material. So again, what do converters want? Again, it's not the end of the world. It is better, but as long as you produce a consistent product, and even if it's consistent with impurities, as long as it's impurities that can be removed without too much cost and technical hitch, then you're onto a good thing. And it would appear that there's certain players. The guys seem to certainly be happy with working with Altura's material, and I think Sigma, looking at the deposit, there's a pretty good chance that they can produce a very consistent and manageable from an impurity side product, which yes, we've discussed oversupply in that sense, and Chinese converters are limited in what they can pay ultimately if they're going to be selling into the China spot market. But all things considered, Sigma has is well suited to being taken up. But I guess ultimately, financials and economics count. But on the face of it, they seem to be well positioned, and I think that probably played a role in SocGen's decision making.
Yeah, and a question long term is this only going to be destined to China? That's currently where all the hard rock conversion is. But if someone develops conversion in Europe and the U.S., or if Nemaska or North American Lithium ever get up and running, you could have conversion that doesn't go all the way, or they'll have customers other than the Chinese customers, because those Chinese customers.
Well, I guess that's where the Mitsui involvement comes into play. But
we'll see. I don't know if Mitsui is going to do like Toyota Tsusho with Orocobre and build their own plant. But you got POSCO is looking to take Pilbara's material. Look, and you have Neo Metals is talking about in India. Downstream conversion, and AMG out of Brazil is looking to convert in Germany, and Piedmont is looking to convert, in North Carolina. So in time, Sigma's material hopefully will have a home other than, in China, because just selling to China, we saw what happened with Alita, and it's caused some suffering for Altura and Pilbara and even Galaxy as well. On to other areas. I mentioned Vulcan Energy just really quickly. Last year in the bear market, Liontown was a company out of nowhere, made a discovery, and that stock defied gravity while everything else was falling. A similar dynamic seems to be happening with Vulcan, which kind of came out of nowhere this year. They managed to raise, I think, $3 to $4 million at a reasonable price. No warrant. This is a geothermal project, in Germany, still very early. There's still a lot to prove, but geothermal in California has also garnered some attention. Controlled thermal, and Berkshire Hathaway is BEHR Minerals, and there's Energy Source, what used to be the symbol. But those controlled thermal and BHR recently got some government funding out of California. So we've been fans of DLE. We've talked about E3 Metals and Livent partnership. That's an oil field brine. There are other unconventional brines, but the geothermal story is one that we're watching, on a global basis, and wanted to comment. Also within Europe, I'll mention a project no one really talks about too much, but I know Garrett Fueling, has liked it, which is the Sinevec project in the Czech Republic. That has now been taken over. Actually, of all the projects in Europe, other than Jadar, I think, in Serbia under Rio Tinto, the Sinevec project, $32 million being invested by a state-owned Czech utility, right? So you have a 9 billion market cap company. It has state support. It is a utility. We're talking about like, where's the oil companies? Where's the tech companies? Where's new money going to come from to develop lithium projects? Here you have a little bit of a sleeper in the Czech state, basically saying, we're going to get into the lithium business. Still a lot to prove there. The asset, we're not going to get into the details too much because I don't know the project that well, and I'm not convinced that European Metal Holdings is a fantastic way to play what is now a minority position, in that project. I've never been fans of being a minority partner in a project. I'm a fan generally and rooting for the success of Standard Lithium. But, they've already baked the cake with their, partner Lanxess, giving them 70%, maybe 60%. But it is worth watching. Can Europe develop a source of supply Look, there's Infinity, there's Savannah, there are other kind of hard rock projects, but the Sinovac project has now, it had some kind of Czech, cloud and takeover, noise around it. But the game seems to be with the Czech government, and it's just something that we're watching. Argentina and South America broadly, I just want to comment quickly. I think, the Argentina is still politically is problematic. There's neo-lithium, there's millennial lithium, which actually got their EIA, so that's attractive. There's a number of advanced projects. Lake Resources, with Lilac is making some progress, but broadly, sentiment toward brines in Argentina, has not been, super great, and I don't see that changing in the short term. Lithium Power, a company we've known well, they got their EIA approved earlier this year, and they're just waiting for Codelco. But with COVID impacting, Chile copper in particular, which hurts Codelco, the timing of when that project's going to advance is also a question. It was good to see that a lot of the insiders were buying stock in Lithium Power in the past few weeks, so that woke up the share a little bit. But I won't comment more on South America other than that, except also to say that again, Lithium Americas stock prices now, the valuation of the company is $460 million. That's half the valuation of Livent. It's more than Pilbara. It's almost as much as AMG Advanced Metallurgical. This for a company that now has $90 million of secured debt to Ganfeng. And there's two questions I have on LAC. That their shareholder agreement with Ganfeng has not been made public. Their debt with Ganfeng and bank check has not been made public. But with all of these delays, there's just a lot of debt risk. I don't know if there's a force majeure clause within their debt, that might be able to get them to wriggle out of it. But if not, as good a partner as Ganfeng is, if LAC's not able to pay, or if Minera XR is not generating sufficient cash flow to enable it to pay back their debt, is there a scenario where Ganfeng, I guess, takes more control, of that project? We've just seen what happens with secured debt. Alita went out of business, high secured debt. Nemaska went out of business, and Altura is like sweating, beyond belief, and their share price has been under pressure, as has Pilbara. So secured debt is a real risk, that's not talked about enough, with respect to Lithium Americas. Yes, they have a great partner, but another thing I'll say, on that is just the Argentina is desperate for hard currency. So the export tax, that's out there, you see what's happened with the soybean, company. It looks like they're taking it over. Nationalizing it, might they go after the lithium industry more aggressively, to garner, hard currency? So that's just another risk to, LAC's, direct cash flows. But Thacker Pass, look, again, the valuation is very high. There's a lot of speculation. I wrote this note, which lithium company might Tesla buy? It was picked up, by Clean Technica and a couple of other groups out there. So I do think that some of that speculation with the Tesla halo, is playing into that. My speculation on might Tesla buy it was also at a much lower valuation. Elon Musk tweeted, referencing clay, referencing brine, but also referencing how difficult those are to make, super high purity lithium hydroxide. So to be seen, but rooting for Lithium Americas. I think in general, the United States, there's Lithium Americas, there's Ioneer, which had a definitive feasibility study. Standard Lithium, which is advancing their project, and then Piedmont came out with their PFS. All four of these companies by this time next year might be in a position to be looking to be fully funded. Right, you're permitted and ready to raise full capital. Look, the world needs it. Needs all four of those projects, and then some. We've talked about the need for 50 hydroxide plants over the next 8 years, and probably 75, if you include carbonate plants. So $30 to $40 billion, $4 to $5 billion every year needs to be invested. I like companies with clean capital structures, all equity, and preferably, if they're uncontracted, unpartnered today, like Ioneer is in that camp. Piedmont's in that camp. As I mentioned, Standard Lithium already has a good partner. They just need to prove the concept. The United States, I think, is a very interesting space. There's a number of private companies. So we mentioned Controlled Thermal and Berkshire Hathaway. There's also Energy Source Minerals, and Geothermal, and there's a few others that we're tracking, not on the Mr. Market Scoreboard.
But the one thing to point out, Howard, that's a big appeal for something like Energy Sources, there's already geothermal there. So the brine is already at surface.
That's
makes it very attractive because you're dealing with it already being brought to surface by someone else.
That's right. Geothermal is something we're digging into a bit more deeply, and as we are a number of, some other private unconventional stories. Last thing I'll mention, I think, is just on Bacanora. There hasn't been much news there, but that is the most advanced clay project. It has a great partner in Ganfeng. The mining minister said some, weird things last week or 2 weeks ago with respect to nationalization possibility of all of lithium. And then I saw like the major union, push back on the mining minister and basically said, no way are you going to do that. You're not going to risk, jobs and investments. So those things are, they're out there. Political risk is very real again, which is why we, to the extent we can get, North American supply, U.S. supply, Canadian supply, Australia, very reliable. But you've talked about the possibility of, the downstream conversion into hydroxide as a busted flush, right? The Lithium 2.0, we had all this enthusiasm in Argentina. He had all this enthusiasm in Western Australia and Lithium Valley kind of downstream. I think, outside of Kemerton, those 50,000 tons, will Kwinana Tangshi ever get built, or will that now go to scrap? That's a big question mark. We'll see. Still a lot of questions. The Nemaska, I'm anxiously waiting to see. They had 8 bidders, and they're going to narrow that down. I'm still rooting, for some success there, but to be seen if that's just going to be a spodumene story or if that's going to be if bidders are coming in on the Shawinigan, downstream, or some alternative, maybe more conventional conversion technology.
In Lithium-ion Rocks, Lithium-ion Bull, and through our respective LinkedIn and Twitter posts, Rodney and I may share with our audience some rationale for a stock for which we have conviction, to own or not to own. If you agree or disagree with and act on or against the rationale of anything said or written in this or any other Lithium-ion Rocks or Lithium-ion Bull, that's your free choice. But to be clear, what you are listening to or reading is not investment advice and may not be unbiased. It should not be construed as an investment recommendation to buy or sell any security. Rodney and I are not registered investment advisors nor broker-dealers. Please visit libull.com for further disclaimers.